I'll let you know when it's there. Hello, everyone. This is Sergio Morero, and we're here on Rebel One Live with another special guest, Leslie Goldman, who is general partner and co-founder of the Artemis Fund. Thank you for joining us today, Leslie.
Thank you for having me.
And I want to shout out Leslie. Leslie went from doing a podcast in Austin on her way back home to Houston, pulled over and is making sure she's, with us tonight. So thank you for being super flexible and hopefully you're safe as well off the road. But want to share more about Leslie's background for those that don't know. She has her undergraduate from Yale University, also has her JD from Fordham Law School, has invested in over 60 companies and 11 funds, and has over 25 years of experience as a corporate attorney. And we're excited to have you with us tonight, an advocate of female founders. And so excited to dive in. But Leslie, if you can share with the audience a little bit more about the Artemis Fund.
Sure. And I just admitted some people as you were talking.
Thank you.
So the Artemis Fund, we founded the Artemis Fund in 2019, and we've closed one fund so far, and we're going to have a total of 15 companies in the portfolio. We've got 11 going on 13 because we're about to do 2 more great deals. And we have 4 markups and 4 more coming. So we're pretty bullish. Obviously, it's a great market. We focus on female-founded companies, female-founded and female-led companies, and that's largely because there is a lot of evidence that they outperform, their teams are diverse, and B, because they don't get any funding, frankly. They get 2% of all the VC dollars out there, and last year, I don't even know what that number was, maybe upwards of 150 billion. So they get about, this year, they're tracking, last year they tracked 2.3%, this year 2.2%, so doesn't seem to be going in the right direction. So we're taking advantage of the opportunity and trying to get other people involved as well in understanding the other half of the population and what they're doing. So that's the Artemis Fund, and we're going to start raising our Fund 2. We're starting our Fund 2 raise already to get more female founders money.
Amazing. And can you share a little bit more? Are there particular industries or stages, size checks, a little bit more about the strategy and what founders should reach out to you?
Yeah, sure. So we invest in the seed stage. We ordinarily look for revenue, so revenue generating companies at the seed stage. We like to lead with a $500,000 check size, at least from Fund 1. Fund 2 will be slightly bigger. And then the industries we're looking for really around thematically financial inclusion. And that can take the form of a lot of things because we have a variety of companies in our portfolio, but they all fall into either fintech, e-commerce, and sustainable e-commerce, and the care economy. So, yeah.
Excellent, excellent. And can you share a little bit more when you say sustainable e-commerce? What's an example of sustainable e-commerce?
Yeah, so we have 2 companies that go to sustainability. One is a plant-based milk company that obviously the plant-based is sustainable, but also the packaging is sustainable. And so that's an example. And she does e-commerce. She does it's mostly sold through, it's B2B, B2C, but it's mostly sold through e-commerce. And the other one is DressX, which is really e-commerce. It's digital clothing. So nothing real, nothing tangible, nothing you can touch and feel. But so if I'm on this Zoom and I didn't want to, get dressed today, I could just have a digital piece of clothes, a digital suit on, or, you could change your suit as you're talking to me. Or if you're doing a TikTok video, you can wear whatever you want and then change. Or if you're gaming, there's skins, there's NFTs, a lot of applications. But what I loved about it was the sustainability aspect, because there are a whole heck of a lot of people, 1 out of every 9, that buys an article of clothing just for a picture, for an Instagram post, or for a video. And right now they are getting to those 1 out of 9 people, and working with the UN and the Ellen MacArthur Foundation to show, how damaging it is to create clothes and destroy them. It's one of the largest, problems in terms of our emissions and damage to the environment. So that's an example of sustainable e-commerce.
No, thank you for providing an example. I know you've been a champion for early stage, female founders. But I know your background is as a lawyer. So can you share a little bit with the audience your story? How did you go from being a corporate attorney to now leading your own fund?
Yeah, so I've always well, first of all, I've always been interested in gender equity. So that's sort of the baseline. And throughout my career, I've often found myself as the only woman in the room, which is, I don't know how many men have been the only men in the room of 10 people around a table where you're discussing strategy. But at first it was very uncomfortable. Then I had to get used to it, but then I started to do something about it to try and help the team understand that it would help to have some diversity around the table for diversity of thought, right? To come up with new ideas, because we look at things differently, because we sit there as we're responsible for the kids, we're responsible for 85% of the consumer decisions of our household, we're responsible for making those doctor's appointments, we're responsible for looking ahead in the future in the community, and at the same time we're working, right? So we have a lot of different hats we wear. So we're naturally going to have a different sort of lens to look at things and different ideas, and the statistics prove out that when you have diverse thinking around the table, you definitely produce better results. And so I found myself as a lawyer going through, I was in law firms, and then I was general counsel ultimately of a company, which is part of Thermo Fisher Scientific. So I was on the management team. I started as the only woman on the management team, and then we had more women join us, which was really nice, and changed the dynamic for the good. And then after that, I was doing some recruiting and noticed that at the top level, there was a dearth of women. There was a dearth of diversity at the very top level of our Fortune 500 companies. They were the ones that were engaging us to recruit for them. And there's no way to change that top level without going all the way downstream or upstream, depending on how you look at it, probably downstream to the very early stage. And I started angel investing maybe 5 years ago, and realized that if you don't see more CEOs, female CEOs and female founders, you're not going to see them when you get to the public offering. So you're not going to see them going through the PE stage and then the pre-IPO and the IPO stage. So I was very excited about investing already. I was a deal junkie. I was very excited about, the performance of diverse teams. And I was excited about, what women could do, and putting all those things together was sort of a natural fit for me. I went from angel investor to wanting to just get more money out there to women, to female founders, because little checks really don't do it. We need a whole heck of a lot more money to get out there.
Excellent. And so starting as an angel investor and then moving in, can you speak a little bit to how you found your co-founders for the Artemis Fund?
Yeah. I mean, the other thing is all three of us saw a problem. Founders start companies because they see problems, and then they decide they want to start a company because they have there's a solution that they have that's not out there. So my two partners, Diana Murakovskaya and Stephanie Campbell, they also were deep into this, immersed in this ecosystem, this founder funder ecosystem. So Diana had an incubator program for female founders in New York for 3 years that she ran. And, she helped them get funding. She helped them with strategy, helped them get funding, and realized that, it was tough. It was tough to raise money. And it's especially tough as they grow and they get into the B round and the C round. And then so she had been working with them. She wanted to find more female, both funders and founders. And she moved to Houston. I met her through the Houston Angel Network, where I was a member, one of the few women, and she was a member, one of the few women. And Stephanie was running the Houston Angel Network. And all three of us just turned to each other and we had this aha, what are we going to do about this? And so gave up our cushy jobs and started the fund.
Amazing. I mean, and can you share also, you're a fund, it's a female fund, so I want to get more into, that there's definitely a challenge, less that there is a challenge because we know there is one, but what are the things we can do systemically to overcome it. But before we go in that direction, I want to hear more about the Houston ecosystem. Can you share some unique insights on why Houston, and how that helps you all create a unique competitive advantage?
Well, first of all, Houston, I'm from New York originally, and Houston is a big, huge fourth largest city with a small town feel. People are, I mean, one of the reasons I love Houston is it's warm, it's welcoming. People meet each other and they're excited about meeting each other. It's easy to get access to events and network. And so in that respect, it's a great city to be if you're trying to network and you're trying to raise money, or you're, whatever it is you're trying to do. And I like to be with people. I like to learn about people. I'm social. But Houston has put a lot of time, money, and effort into developing the startup ecosystem. And it has the resources to do it. There's a lot of money in Houston, and there's a huge appetite now to diversify away from oil and gas, and from energy, from old energy. Right now the energy companies are looking to innovate, and they have their own venture arms, and they're trying to find some solutions to some of our biggest problems and some of our biggest climate problems, which is amazing. But so there's a groundswell, and we've just built the Ion, which is a very big facility in Houston for entrepreneurs and for funders. And there are a bunch of startup development organizations, incubators. There are more and more funds. There are more and more angel investors. It seems to me everywhere I go, I run into somebody who's interested in, angel investing, what I do, or has invested in a startup. And now there are some Houston-based startups that have raised several rounds, and you're going to hear about more and more of them. So it's a great place to be. Awesome. And the other thing is, we can look at, as a VC fund, we can be a little bit like Switzerland, because we can look at both coasts, and VCs from both coasts pull us into deals, and we're constantly getting out there and meeting our co-investors, because it's very important when you're a seed stage investor, you've got to know the upstream investors. You have to know who might be interested in the deal once you get to the B, and you need $50 million, $100 million. And so, and the three of us are able to scour the nation, and particularly the coast, to find those people, because there are many more funds, obviously, in New York and in the Bay Area and Los Angeles.
Great. Houston, and I would say even with COVID and people staying in place, the movement to look up startups virtually, keep making investments has only increased. So being central in the US, I'm sure has helped quite a bit, and also shifting the focus on female founders for you. And can you share more on at a higher level, what can we do? Yes, it's putting more capital into the hands of early stage ventures. You can be an angel, but what are some things systemically can we do to really more than shift the needle, right? You're talking about it's 2 to 3%. How do we 10x that? What are some creative things we can do? And I would love your thoughts, since this is your expertise and focus area.
The fastest way to fix it would be for the large institutional investors who are LPs in those mega funds, the funds that have billions of dollars under management, to challenge or require their managers to look at, to have 20% of their deal flow be underrepresented founders, and to put 10% of their funds into underrepresented founders. And in our case, if we're just talking about female founders, there's 40% of the companies that are founded or female founded companies. We get 3,000 deals a year. So the deal flow is, and that's just us. So the deal flow is there. It's definitely there. And there are plenty of underrepresented founders that just can't get funding because they're not looking. The typical, the old established VC funds, they have their network already. And they get deal flow from their network, from the normal sources. those? Well, those aren't the ones that are producing or finding female founders. So limited partners really have to challenge their general partners to say, are you looking outside your networks?
Yeah.
How many deals do you see, or how many deals do you see a year from female founders? Tell me what percentage. Then what percentage are you actually investing in? I've got to tell you that I know for a fact, because we've done the research, that some of the very, very, very large funds that have been around a long time have less than 3% of their portfolio is female CEOs and female founders, female CEOs. And that is, I mean, that's systemic. That's a systemic problem. So nothing's going to change unless the people who have the money, the big money, actually require their general partners to look elsewhere and to make those investments and allocate money differently.
Yeah, I had some conversations with other advocates in the space that they're also LPs, and they were even advocating at the public policy level to see if we can get more of the endowments and pension funds that are public dollars to make sure that they have those requirements in terms of deploying their capital, because most of the money that they're getting also is from the same community. So why not have those earmarks to qualify that?
Even if it's a pledge, even if it's the LPs getting out, I mean, imagine like if BlackRock even got out there, Larry Fink gets out there and talks about impact all the time, and he talks about gender diversity, and know he's really interested in it. But if he got out there and said, we are going to scour the diligence of our general partners of the data room and make sure that they are looking at X% of female founders every year, and that they're actually making an effort to give a X% to female founders. It's amazing to me that some people will say, well, then they're not going to find the best deals. That is so not true. They're just not looking. They're not looking at female founders at all. They're not looking at the big, large chunks. And you'll see more as more and more get funded. You'll see more and more on the stock exchange. I mean, we're starting to see a trickle effect, but it's still only 1 or 2 female-founded companies coming up a year, because there's so many fewer that get to that are getting funded to be able to get to that stage.
Yes, amazing. So much great work to do. For you, one of the questions that I've talked to several funds that are focusing, not by industry, but by, demographic of founder. How do you develop the expertise to have, to be able to look at an industry, to have that depth of industry while keeping that demographic constant? So, to be able to look at an e-commerce company and then maybe a, healthcare focused company, but they're all female founders, to have that expertise. How do you all manage that?
Yeah, it's a good question. And it means you can't be too wide. You can't cast too wide a net. And every one of our companies, when we look at companies, we look, is this synergistic? Does it fit our thesis for financial inclusion? And which of our other companies will they be able to work with? Where will we get the synergies? And so our fintech companies, there's clearly crossover between them, and they are talking to each other, and there's either using each other or promoting each other's products. It's the same thing. And some of them then tie into our e-commerce companies or tie into our care tech companies. We're not boiling the ocean, and we have expertise in the areas in which we are investing. If we don't have expertise, we go out and we find the expertise, and we get educated. We do a market analysis every time we invest in a company, if it is not already in the exact space that we already have a market analysis. So you have to be careful, because we can't be an expert on everything, and we know that. And that's one of the reasons that we don't do straight CPG, because we just don't have it. And we don't do straight healthcare. We do things that enable the CEO of the family, mothers to be able to go back to work or to be able to take care of aging parents, like Neighbor Force. That's one of our companies, and another one of our Hop Skip Drive enables, parents in foster care and the foster care system and school districts to give kids rides who wouldn't otherwise have access to them. And Workin' Mother is they're a company that allows that builds out space for lactating moms, and they work with all the commercial developers across the country. So there's an example. That's what I mean by, by enabling, by the care economy. And then fintech is all about, how are we going to help people save? How are we going to help people make money? Our first company is Unest. It's college savings. We're just closing their Series B right now, and the valuation has been, it's a great valuation from where we started. So the company is doing really, really well, both operationally, from every perspective, operationally and with partnerships. But that's an example of, allowing the 99%ers access to something they wouldn't otherwise have access to. Most people cannot afford a financial advisor. Well, now you can open the app, and in 3 minutes, you can set up a plan for your child, and you can even trade. You can even add crypto to it. It's so cool. So, those are just some examples, but so we have a fintech platform for food trucks, and we use the experts that we already have from our relationship with Unest. They are now providing expertise to GoodFind, which is GOODFYND, in case anybody's interested. And those same experts are also providing expertise to CNote, which is another fintech company. So yeah, we're not trying to boil the ocean.
No, that's great. That's great to hear. It brings clarity to those looking to start a fund or making investments, showing that focus helps you. I was taking a look at your team. I know Diana has the background in finance and engineering, and then also on the other side, Stephanie with the connections in the Houston Angel Network. You have an array of experts you can tap into. So amazing team, and excited by what you all are doing. But I don't want to take too much of your time. Want to turn it over to you, and if you could share a little bit with the audience, what's next for the Artemis Fund.
Well, thank you. I really appreciate it, and thank you, everybody, by the way, for joining. So the Artemis Fund, we're going to continue the charge of finding amazing female founders and investing in them by raising Fund 2. So, which is starting now, and we're going to do a first close in January. And that fund will have 20 companies in it, the first one 15, and we'll go from there. We're going to continue in the seed stage, since that's our sweet spot, and I think that's where we add the most value, because we work very closely to get them to the next stage. So that's the goal. That's the plan.
Excellent. So I know there are a few questions for those in the Zoom room, but I'm going to log off the live stream so we can take those offline. So thanks everyone for watching. This is RBL1 Live. We have Leslie Goldman, who is the founder and founding partner and of the Artemis Fund. So thanks for joining us tonight, Leslie.